Crude ending the session up another 4% today. WTI now up more than 20% in the last week. Let's bring in Paul Sankey of Sankey Research to talk about the potential blow-up. Paul, great to have you with us. The ban on oil, it was telegraphed. Most people expected it. It seems also largely sort of just ceremonial to the extent that it doesn't immediately come off the market. So how much more will oil go up, do you think?
You know, I think we're maxing out here. I really do. You're getting into a situation where you're going to get shortages in Europe. And above all, as you mentioned, from today's Ukraine not seeking membership of NATO story, what we're also hearing out of Washington and other sources is that the FSB, the former KGB, now Russian intelligence, is actually, some of it is working against Putin. So this is turning into an absolute military disaster, as you can see from the reports of some of the commanders that are being killed. That's the basis for why people think Putin's intelligence is working against him now, because they're just taking too many losses of too many senior leaders. And we think that they're actually suing for peace here. So we're looking for a solution here. Hopefully, fingers crossed, we may get one. And you saw the Ukraine story. Later, you saw Putin come back and say, I'm banning all exports of commodities. But I think that was part of his negotiating position. So I think you're potentially maxing out here. Now, I'm very nervous to say that, because last time I was on, I said, hey, we could short oil here. I didn't think Putin would invade. But, obviously, that was a quick cover on that one, because as soon as he went in, we were clearly going to go a lot higher. But so for once, I'm prepared. For once, I'm prepared to say short oil, long tech here. It'll be the first time in 2.5 years I've said that. But I don't think we can go a lot higher, simply because we're maxing out in terms of things like how much tighter Europe can get.
So you're completely reversing. What is the Russian?
Well, it's a trading call, definitely.
Yeah, trading call. What is the Russian-Ukrainian premium in oil right now?
Well, that's one of the interesting things, because everything on an underlying basis was so tight, right? So we actually, we got to 100 pretty much based on fundamentals. So you can say that the last $30 was all the risk, yeah.
Paul, it's Tim. Thanks for joining us. Last time we had this spike in 2008, Georgia had invaded Ukraine. Sorry, Russia had invaded Georgia. You had crack spreads which were starting to compress. You had nat gas inventories which were actually a lot higher. We have dynamics that, to me, say we could go higher. And oil and energy as a percentage in the S&P was about 16%, so we were at an all-time high when this happened. We're at 4% now. Doesn't this all lead to higher oil prices?
I think on an underlying basis, we've clearly added risk to oil, and there's a couple of very bullish things out there. The first is that we have very low unemployment in the US and really crazy oil demand numbers. The second, I'm sure you saw in the past day or so, China raised its GDP target for this year to 5.5%. That's enormously bullish for oil demand. So obviously what we've all been looking for is, where's the break point of demand? And we've busted it in Europe. It's done. I mean, you've got people appealing to smear the curve, or whatever we call it, flatten the curve by using less oil. That's how bad it is in Europe. $700-800 a barrel of oil equivalent for European gas. So I think you're maxed out on Europe, and that's just a damaged situation. But I'm hopeful that we can get peace. In that case, we go back to what's happening on an underlying basis, and I'm still pretty bullish about the US. And certainly with the Chinese Party Conference coming up, I think if they want 5.5% growth this year GDP, they're going to go for it. So I think it's really fascinating. Last time, if you remember, we got to about 120 in 08, and the Saudis said, this is too high, we're going to bring it down. We did a sort of extra $10 of upside from fundamentals, and then a $20 speculative spike to 150, and then we were cooked, and the next stop was actually 27. So I'm not saying we're going that low, because I don't think there's so much liquidity in the world. But I do think we're maxing out here in the 130 to 150 range. I don't think we can go a whole lot higher, personally. And one of the things I said was the top today was people talking about $300 oil. You just can't do it. It's financially impossible, et cetera, et cetera.
All right. Paul, before we let you go, you've been at this in terms of covering the oil industry for decades.
30 years.
I think that's right. 30 years. OK, so it is decades, plural.
Gulf War, actually, Gulf War I was when I started.
Times of this extreme volatility. I mean, oil is up, what, 7% this week, 26% last week. What happens to funds out there. I mean, we've been talking sort of here, and I'm wondering if you're hearing anything about commodity funds broadly, whether it be oil or funds that also trade things like wheat, et cetera, being on the wrong side. I mean, who would have predicted this sort of volatility?
Yeah, no, it's a disaster. And, one of the things people have been saying, for example, about Chevron is this thing moving because it's a pretty obvious major short that, potentially getting blown up. Because if you look at the Chevron chart, especially with Chevron's exposure to Kazakhstan, it kind of doesn't make any sense. I can understand things like Halliburton and service companies ripping off a low base, but Chevron's already at a record high and then it went parabolic. So yeah, and as you know, the nickel story, has actually had the whole London Metal Exchange suspended. I mean, they stopped trading, which is how crazy it is. So yeah, it is a time when we're expecting to see blow-ups, pretty much in everything in commodities, and someone somewhere is hurting. There's a huge amount of pain out there. There's no question.
Paul, thank you. Good to see you. Paul Sankey, Sankey Research.
It's always a pleasure.
Paul mentioned some of the other commodities on the move. Gold prices, they settled at their third highest close ever. As Paul had mentioned, LME suspended nickel futures trading for the first time ever today. Wheat rising again after 6 straight days of limit up. It was actually limit down in today's session. Guy, at one time you traded gold. This is extreme in terms of commodities.
Mm-hmm. Well, for gold, it's not, but for commodities, absolutely. Right. And if for somebody to say they've seen this before, nobody's seen it, especially in nickel. Tim talks about standard deviation moves in the market from time to time, 2-3 standard deviation moves. In our world, that's big news. I mean, nickel had a 30 standard deviation move, things that, again, nobody's ever seen before, to the extent that they had to shut it down. Now, we started, you asked Karen what's wrong with the banks, and she gave a great answer. I think some of the things that might be going on, don't underestimate their exposure to potentially sovereigns that could potentially be blowing up in the commodity world, hedge funds, all kinds of different things. I mean, that's out there. That's the next headline to come, that such and such blew up in the base metals world, because it's happening before our eyes, but it speaks to everything that Paul talks about. By the way, he's probably spot on in terms of crude here. I mean, it's not a bad level, especially in the OIH, which has been ripping to take some money off the table.
Karen, what's your take on oil here? I mean, Paul has tried to go out there and make calls in terms of where it tops out, but he sees more risk to the downside than the upside at this point.
Well, I didn't want to, after you goodbye the guest, I didn't want to bring him back, but I really would like to ask you that same question. If peace breaks out tomorrow, where does oil go? And I mean, it wouldn't surprise me if oil was down $25 on a very, on a very bullish sort of peace announcement, at least. And then from there, probably lower. But, one thing I looked at today was Glencore. Do you remember we talked about Glencore in the sort of crash of commodities? And I got to think this environment is just fantastic for them. If they can not get stuck and just be trading. And what?
I was just going to say, yeah, sorry, you can't see me. I'm talking over you. Apologies, Karen. But they're the 4th largest nickel producer in the world, behind Norilsk and BHP and Vale. And so Glencore is your canary on commodity volatility all the time to me, up and down, and it's been ripping.